debit and credit fail more students than any other two words in accounting. By the end, you'll derive every one yourself, not memorize it. Good news, you already own half of it. Chapter 1's equation, assets equal liabilities plus equity, the scale that never tips, is where we start. One piece of vocabulary first. Every account is shaped like a T. Left side is the debit side. Right side is the credit side. Forget good, forget bad. Debit just means the left. Credit just means the right. Here's the map. Read like directions, not vocabulary. Assets equal liabilities plus capital minus drawings plus revenue minus expenses. Chapter 1's own equation just opened up. Every term here carries a sign, plus or minus. That sign alone decides its debit and credit rule. Watch where each term lands. Start on the far left with assets, the one piece you already own from Chapter 1. Assets sit on the left of the equals sign, left side of the equation, left side of the T account. Assets grow on the left, the debit side. Same word, same side. Now cross the equals sign to liabilities, the one idea the rest of this map depends on. Coming straight from assets, you'd expect the same rule to hold. It doesn't. The moment you cross that equal sign, the rule flips, like a mirror. If that feels wrong, it should. Liabilities sit on the right of the equation, so they grow on the right of the T account too. Up with a credit, down with a debit. Flip this once, and every term after it reads backwards. Next, owner's capital. It carries a plus sign. That's the same side of the map as liabilities, so it follows the same flipped rule. Up with a credit. Put your own money into the business and equity goes up. A plus sign always means read it like liabilities. Owner's drawings carries a minus sign, and that sign is telling you something, not just sitting there. A minus sign means that term works against equity. The two move in opposite directions. When drawings goes up, equity goes down. Take 100 out for yourself and your stake drops by exactly that 100. That inverse relationship is why the term is subtracted and why the rule flips. Drawings grows with a debit. Notice the shortcut forming, plus sign. Act like liabilities. Minus sign, flip it. Revenue carries a plus sign again, so it's back to the liabilities rule. Revenue grows with a credit. Here's why that one trips almost everyone up later. Cash coming in feels like it should be the good news, the credit. It isn't. The cash coming in is the debit. The revenue itself is the credit. That's because earning money is what grows your equity, and equity is a plus sign, credit side term. Hold on to that one, it's exactly what the next transaction tests. Expenses carry a minus sign, and it means exactly the same thing. Every expense you record makes your equity smaller, pay $150 in rent, and your stake drops by $150. Same inverse logic, so expenses, just like drawings, grow with a debit. Notice the pattern you just built yourself, term by term. A plus sign acts like liabilities, credit. A minus sign flips it, debit. That's the whole rule, derived, not memorized. Notice what just happened. Assets, drawings, and expenses landed on the debit side, DEA. Liabilities, owner's capital, and revenue landed on the credit side, LER. Put them together, dealer. One caution before we use it, that E is owner's capital specifically. Drawings and expenses are equity too, but their minus signs push them across to the debit side, exactly as the map showed. You didn't memorize that, you derived it. Now watch it work. 5 transactions, back to back. You open Maplebean with $6,000 of your own cash. Ask the 3 questions every entry answers. Which accounts move? Cash and owner's capital. Which direction? Both up. Which rule applies? Assets grow on the debit side. Owner's capital is a plus sign term, so it grows on the credit side. That gives you the entry. Debit cash, $6,000. Credit owner's capital, $6,000. Debit on top. Credit indented underneath. That indent is the convention, and it never changes. Now watch it post. $6,000 lands on the left of cash. $6,000 on the right of capital. 2 accounts, 1 on each side. Equal amounts. You buy a coffee grinder for $900 on account, meaning you owe for it, you haven't paid. Same 3 questions. Which accounts? Equipment and accounts payable. Which direction? Equipment is a new asset going up. Accounts payable is a new liability going up. Which rule? Assets grow with a debit, liabilities sit on the right of the equation, so they grow with a credit. Debit equipment, $900, credit accounts payable, $900. Here's what makes this one worth its own slide. No cash moved at all, and the equation still balances. Both sides went up by $900 together. Now watch them post. 1 debit, 1 credit, and the scale from Chapter 1 never tips. Here's the one that gets almost every student. I've seen it for years. You sell $40 of coffee. The customer pays cash. Now watch what your instinct wants to do. Cash came in. That's good news. So the money feels like it should be the credit. It isn't. Go back to the map. Cash is an asset. Assets grow on the debit side, so cash coming in is a debit every time. Debit cash 40, and revenue carries a plus sign. That means it reads like liabilities. It grows with a credit. Credit service revenue 40. Look at what that means. Two accounts both went up and they still landed on opposite sides of the entry. That is double entry doing its job, and it is why the books stay level. Now notice cash is a running account. 6,000 from day 1, 40 today, both stacked on the same debit side. The feeling that this is backwards is the feeling of trusting your gut instead of the map. The map was right. You pay $150 in rent. Expenses were a minus sign term, and a minus sign flips the rule, so expenses grow on the debit side. Debit rent expense $150, and the cash going out shrinks an asset, which is the opposite of how assets grow. Credit cash $150. Watch cash take its first entry on the right-hand side. Last one, you take $100 out of the business for yourself. Drawings is the other minus sign term, so it follows the same flip. Debit owner's drawings 100. Cash goes out again, so credit cash 100. Now cash has everything. Add the debits, subtract the credits, and it closes at $5,790. 5 transactions, 5 balanced entries. Now let's prove it. Every account we touched, both sides added up. Start with what the business owns. Cash finished at $5,790. Equipment $900. Add them. The asset side is $6,690. Now the other side, what the business owes plus what you own. Accounts payable $900, and your equity $6,000 you put in minus $100 you drew out plus $40 you earned minus $150 you spent. That is $5,790. Add those, and that side is $6,692. Same number. Watch them land on the scale. The beam from Chapter 1 is still perfectly level. It never tipped because every entry put a debit on one side and an equal credit on the other. Try it yourself. Free practice exercises are on the site. Every debit found its equal credit. That's double entry. You didn't memorize a single rule to get here. You opened one equation, read its signs, and derived all 6. If that made it click, subscribe. New accounting and finance lessons every week. Everything you need to practice is free, and the link is in the description. Chapter notes, worked examples, and practice exercises. Want more on this chapter? The full chapter. 2 goes 20 transactions deeper. And when you're ready, the next lesson is on screen right now. Start it, and the course carries straight on. Learn to do that, future CFO, and you'll never guess a debit or credit again.